A forecast of shrimp prices in 2014 will logically weigh in supply and demand factors. Of the two, we consider the supply elements much less predictable given how susceptible it is to nature and disease. Though difficult to predict as well, demand is tied highly to world macroeconomic figures, subject mostly to the actions of world's central bankers and politicians. These tend to be more predictable. On the demand side, a downward pressure from 2013 highs could be offset if European economies shake off the lethargic growth that they experienced since 2008. To a large extent, the U.S. economy has been held back from further economic malaise by manipulation of the yield curve and injection of liquidity via the Federal Reserve's quantitative easing program. It is unlikely that such stimulus will cease anytime soon, even if considerable talk about tapering has emerged in recent headlines. There is an important congressional election in November of 2014. The incumbent president's party wants to regain a majority in Congress, and everything will be done to avoid an economic slump that could put that at risk. Our prediction is that tapering will be subdued. Talk of tapering, on the other hand, will not be. Another factor to consider is the possible easing of oil prices. The recent treaty with Iran could conceivably ease oil prices. Should the U.S. consumer feel an easing of prices at the pump, they will increase their spending on other goods, including food. Such consumption would exert upward pressure on all commodities. Yet, the recent treaty with Iran is provisional in nature. It may still backfire, which could create less trust between the countries and pave the path to a hawkish stance by U.S. politicians. For a dovish stance for any aspiring 2016 presidential candidate would risk leaving votes on the table. Thus, one must factor in the very real possibility that oil prices may increase, which we see as a most likely scenario. On the European front, several important European economies remain mired in long-term stagnation. In 2013, a large reduction of Vannamei exports to Spain was felt. Our outlook offers little hope for a fast rebound. A more likely scenario is a plateauing of consumption, followed by a slow and steady climb. With a crippled Spanish economy, the EU's next line of defense is France. Though the recent economic picture in France has not been rosy, it has been able to avoid being dubbed a country in crisis. Yet, lately, economic statistics on France have been negative, prompting one of the major credit agencies to downgrade its debt. This will increase its borrowing costs and constrain social spending, which will eventually set off a political crisis. With the country's strong labor unions, it will be difficult to implement economic austerity and real reform. In the longer term, Germany, being a large importer, may be unable to carry the weight of the European malaise. Any type of sustained economic downturn in Germany will put considerable pressure on prices. Negative scenarios abound for the European economies, yet we must caution that the onset of the next economic debacle is extremely difficult to time. When it emerges, its effects will be sharp and sudden, and its impact on world commodity prices will be considerable. Our view, however, is that post-2008, central banks have learned new tricks that help postpone crises. Systems akin to QE will allow this, and yet intrinsic economic problems cannot be avoided forever. Brazil, as a producer with protective barriers, is unlikely to carry out an about-face on its policy. But if it did, it would open the gates to a vast market buoying prices across the board. Russia also is a market with high potential. With a low debt-to-GDP ratio, a political system firmly in Putin's control, its economic fate will be sustained by the high oil prices we foresee. India, being a producer with considerably more supply potential, will factor less in the demand side of the equation than it will in the supply side. China offers the best promise for a surge in demand, given the vast size of its population and the government policies that stimulate consumer spending. The government has made evident more than many times that it will go through great lengths to maintain its economic growth above the much obsessed about 8% level. All other things being equal, those policies will exert upward pressure on prices. Overall, the demand side of the equation is comprised of often offsetting factors that lessen the potential of demand-driven price shocks. Some pundits predict that the discovery of the cause of EMS disease in June 2013 is a game-changing event that will allow Thailand and Vietnamese producers to reverse production losses incurred in 2013. Conceivably, depressed production levels of 2013, which were down 40% for Thailand and 30% for Vietnam, could be surpassed in 2014. On the other hand, there is always the possibility that this is just wishful thinking. How strong and how fast this recovery takes place is anyone's guess. Thus, we recommend our readers keep a very close eye on production from these two countries.